All right, everyone. Can you guys hear me? All right, welcome to tonight's live stream with Invest with Pete. Okay, so let me just adjust my camera because I realized I was looking a bit weird. Okay, and guys, if y'all can hear me, y'all can see me, do type in the chat. Let me know if you guys are hearing this loud and clear. Okay, all right, let me just do a quick check on my side to make sure that I can see myself as well. Okay. All right. Okay, I think we are good. Let me just double check. Yep. Okay, I think we are good. All right, guys, can you all hear me and see me? Let me just. Wow, today extraordinary handsome. Wow, thank you, ACC game. I hope I aim to do that every day. All right. Okay. So you guys can hear me loud and clear, I assume, right? Okay. Let me just double check because there is something not loading on my side, so I'm just a bit worried. Okay, but as usual, I'm always the cautious one. Okay. Yeah. All right. Just a bit laggy, is it? Just a bit laggy. Let me see. Okay, maybe let me turn off some of my other devices so that it won't be so laggy. Okay. All right. Okay, great. All right, great to have you guys with us. All right, so tonight's session is all about protecting your portfolio. Okay, so guys, how has your portfolio been? Your US portfolio. Okay, so some of you in Singapore, you might be saying, "Hey, Pete, today is very busy day, right? Because today is the start of the Singapore rally season." Okay. Hey. Oh dear. Okay. All right. Can you all hear me? I don't know why there's so much technical issues today. Okay. So just make sure all of you can hear me. Okay. So guys, do me a favor. If you can hear me once more. All right. Because I'm not hearing myself on my end. So I'm not sure if this is something that I need to be concerned with. You can hear me? Type in yes in the chat. Okay. Type in yes in the chat. I know previously you all can hear me, but I just want to make sure that now that you all can really hear me. Okay. All right. Okay. Okay, so today we're going to jump straight into the segment about how to protect your portfolio. Oh no, Liling is still finding it laggy. The rest of you, do you find it laggy? Is it okay? All right. Okay. So I'm just going to continue here. If you find it laggy, let me see if it will improve later on. Let me see if I can turn other things off. But shouldn't be. Everything is off already, except my computer. Okay, I'm just going to turn on this as well. Okay, and hopefully that will be better. Okay, all right. So let me just get started. Okay, so today's segment is really interesting because the last few days, I think you guys must have seen that the stock market has been increasing, has been going up. FPS is less than 30. Wow, very technical. Let me see. Or maybe I share in a lower spec. See if it's less laggy. Oh, it's quite laggy. Oh my dear. Oh my dear. All right. Oh dear, oh dear. Is it better now? Let me see. But the voice is okay. It's the visual that is laggy. Oh, okay. All right. Okay, so let me just see what else I can do here. I want to make sure that I can give you guys the best experience if I possibly can. The sound is good, but the voice is laggy. Oh, no, sorry. The sound is good, but the video is laggy. Oh, okay. Can. Then very simple. I don't see my face. See the slide. Okay. Okay, so let me just jump into today's main segment, right? Which is about the how to protect your portfolio. Okay, right? Because I don't know if you have seen the last few days, the US market actually has been steadily but surely increasing. Okay, so but the thing is, right now there are still a lot of people very worried that hey, what if the market is going to continue to fall from here? Okay, so today I want to start a series on education, right? And I want to start off not by talking about the specific technicals or the specific option strategy, not that, right? But I want to talk about the broader things to get right first. Okay, so it is kind of like making sure the overall picture is correct, the overall picture is good before you jump into the little small things. Okay, and that is how do you structure your portfolio such that if there is further downside, you know that you're protected by it. Okay, and if there's upside, you also want to make sure that you can capture it as well. Okay, so that is the main thing that I want to achieve here. All right. So as usual, standard things, right? None of what I said here is investment advice or recommendation, but really is for purely education purposes. Okay, and this is done in let me show the whole thing. Okay, and this is done in collaboration with Webull, right? To share with you guys more on investor education. Okay, and I'll do this whole series that will last for 6 weeks, right? To go through the various things. So the next few weeks, we're going to touch on like individual option strategy. For example, when you're selling put options, what should you look at, right? When you're buying call options, what should you look at, and so on and so forth. And we also talk about fundamental analysis as well, okay? And so that at the end of the day, you are able to form the full portfolio, right? And you're able to be stronger as you come out of the investment here, okay? All right, so let's go into it. Okay, so the first thing is, how do you protect your existing stock portfolio? Now, I'm assuming that most of you here, you would already have a fair amount of US stocks, okay? A fair amount of US stocks here. So what I'm assuming is that you will, you are actually looking at how to protect your portfolio, all right? Protect the US portfolio, okay? All right, so number one, the usual stuff people right now are doing is very simple. They'll say, oh, you know, Pete, let's just buy some gold, okay? But the important thing is here, guys, I want you all to always take note of this, is to never chase something that has gone up a significant amount already, okay? And I'm referring to gold over here. So if you can look at gold prices, okay? Gold prices, if you look at the daily chart, right, it has gone up quite a lot, right? In fact, I was talking to a student earlier on today, right? And I was telling her that, hey, you know, do expect some form of pullback eventually on gold, right? That's what I was drawing here. And indeed, after I drew already, right, I see down the gold price had to come down already. Okay, so the important thing is never chase the hype, right? So right now, I know a lot of people are still very bullish on gold, and I think gold over the long run, there is some value there, right? I think it will appreciate, right, in terms of the price and whatnot over the long term, but don't chase it. Don't chase the price. If the price is already very, very far already, okay, there's no point chasing the price. The next thing that I see a lot of people doing or consider doing is to look at using put options, right? So they will say that, hey, you know, Pete, I can buy put option on S&P 500 or SPX, or I buy put option on the shares that I already own, okay? But what's the issue here? Can you type in the chat? What's so bad about buying put option? It's not that it won't make you money or anything, but right now, okay, the volatility is very high, right? So what is volatility? Volatility is basically the fluctuation of price, right? And with that, your options premium can be really, really high as well, right? So just to illustrate to you guys, right, how high is high, okay? So let's just take a look at the volatility right now, okay? Let's just go to volatility. Oops, sorry. Okay, yep. Okay, let me show the volatility here. So do you want to make a guess, right? What is the current volatility right now in the market? Okay, right? So if you just go to the screen here. Oh dear, where's my mouse? Okay, so let's look at this. Okay, let's just do like, let's say you're going to do a long put. Okay, you're going to do a buy put over here. All right, and let's just say you want to do buy put on S&P 500. Okay, SPX. You can actually do that on S&P 500. Okay, you can see right now the volatility percentage. It's not shown here. Okay, let me try another way. Maybe I'll show you on the Webull app. Okay, let's just try. So if you go to the Webull app, you can type in SPX. Okay, and you click on the option chain, right? All right. And you can actually choose to see the implied volatility. Right. So guys, can you all see right now what is the implied volatility of, let's say, if I were to buy maybe I'll buy a slightly longer term one. Huh? I'll buy let's say a 20-day, the current call options. Let's look at today. Okay. Even today, guys, can you all see what's the implied volatility like? Right. The implied volatility is about 47%, Okay. And if you go to option statistics, right, you can see why. Because right now, you can see there are a lot of people looking at selling put options, right? So under Webull, if you go to option statistics on top, right, you can see how many people are selling put options and how many people are looking at buying call options, okay? And you can see the amount of put options which is in red or orange on your screen is way more than everything else, right? And that is why the options volatility right now is very, very high, because whenever we see a lot of selling activity, that's when we see a lot of volatility. Okay, so right now the premium is really high as well, right? Even if you look at, let's say you were to just buy a put option for maybe 1 month, right? Let's say you cover for 1 month. So 1 month will be around 28 days, right? You can see it will easily cost you 14K. So what is the premium here, right? Very simple. You just take 141, okay, divide by 5375, right? That is already 2%. 2%, everybody, right? So imagine you're buying put options every single day, you are burning 2.6% every month just to protect your portfolio from falling. But actually, you're reducing it by 2.6%. So I don't really think this is a very, very good idea, right? The situation here is not the preferred one. It's not the best, okay? So what would I do in this case, right? Is that I will look for what I call opposite trades. That means what are the investment that I can invest in that is on the opposite end, right? But I still can achieve, right, good returns over here, okay? So I call this the investment pair. How do you pair your investment together, right, to achieve the best outcome here, okay? So of course, what's the best pair that you can ask for is to look at, right, China, okay? Because right now, the world is actually in a very simple state. Basically, is either you are investing in US, and if US succeed, you will be very successful, or if China succeed, then maybe US will not be that successful. Okay, so how about if you pair part of your portfolio with what we call a counterweight? That means another spectrum, right? And actually, there could be also one outcome whereby, hey, China could do very well, and also US can do very well at the same time over here. Okay, so how do we do that? It's very simple. If you want to invest in China, right, versus your US, what I would suggest is this. Let's say if your portfolio, you are already very, very heavy into US stocks, right? Then you want to look for the counterweight, which in this case is China, that you can possibly look at. And the easiest way is to expose yourself to country ETF. Okay? So guys, can you all type in the chat, right? What are some of the country ETF that you already know is happening, okay, in the stock market right now that you can buy immediately one, all right? Which are the one that you already know? Okay, let me see. Okay, so the video is still a bit blur, right? But so just don't look at my face, look at the screen. Okay, so what are the country ETF that you can buy for China right now? Okay, now I'm going to suggest a few to you, and you can see which one suits your requirement. Okay, so number one, the easiest way is to buy into China ETF that are already listed in the US stock exchange, which in this case, MCHI is one of my personal favorite. Okay, and that's because it has one of the broadest holdings across the whole of China, Hong Kong. So China will include Shanghai Exchange, Shenzhen Exchange. Okay, right? So it has 563 stocks, 563 together under one ETF. So over here, you can see many familiar names. For example, Tencent, Alibaba, Xiaomi, Meituan, so on and so forth, right? That's PDD, China Construction Bank. So you see, it's not just the tech companies, but also the major banks as well. right? So if you want a very broad stroke of what you can own across the whole of China, this is one to consider. Okay. However, if you feel that, hey, the exposure to tech, the China tech, is not the best way to play it, right? You feel a bit scared because, a lot of things are moving. For example, if you look at the last few days, JD and I think Meituan has been falling quite a lot because there was some news about JD potentially going into the food delivery service, right? And that will compete with Meituan, right? So if the tech industry is a bit too scary for you, another one that you can consider is actually ASHR, right? So this is the China ETF that does not include the Hong Kong side of the picture, right? So you can see all these are the what we call the 6-digit stocks. That means they are all either in Shanghai or Shenzhen, and none of the Hong Kong listed companies. So over here, less familiar names. For example, Guizhou Maotai. This is a alcohol beverage, right? Actually, one of the largest company in China as well. Okay. Now this company, Contemporary Amperex Technology Co., might not be familiar to you, but the abbreviation, right, might be familiar, which is CATL. Does it ring a bell? Yeah, so CATL is actually one of the largest producer of batteries, right? So right now, I would say most of the EV companies still take some, or in fact, most of their batteries, EV batteries, from this company. Tesla used to buy from them as well before Tesla built their own batteries. Okay, so right now, if you look at like your BYD, your XPeng, your Xiaomi, and whatever not, right, they all actually get their batteries. Some of them, a portion of their batteries will come from here because this is a huge battery maker. And then of course you include other things like your bank, your utilities, Media, right? Media is like a household brand. Okay, and then of course you still have BYD because BYD is actually mainly in the mainland China itself, not so much in Hong Kong. Okay, now you can also buy its Hong Kong contemporary. So ASHR is the one that's listed in the US. But if you feel that, hey, this one, I don't know whether there's any delisting risk, right? Guess what? You can actually buy directly from Hong Kong, right? This is 2846. Okay, in Hong Kong, everything is in numbers, by the way. Okay, so 2846, this is actually by iShares. So iShares is under BlackRock. Okay, and the holdings is almost identical at just 300 companies, right? So this is immediately one easy way for you to have an investment pair. That means if you have a lot of US shares or you have mainly US ETF, then what I would personally do is to pair up, right? Let's say I have a lot of SPY, VOO, then I will pair up with MCHI, ASHR, or even the Hong Kong 2846, so that I will have a balance. If let's say really US were to be trashed by Donald Trump, who knows? Okay, right? That guy is a bit off the rails now. Okay, if it were to really go down, but guess what? China will emerge as the next economy. Then I would expect the Chinese stock market to really start to shoot out from here, right? So it's an either or all game, right? I don't want a situation whereby, I bet on one horse and then if China wins, then I die, right? So I want to bet on both. But could there be a scenario whereby a deal is struck and both countries will prosper from here? It could also happen as well. Okay, so I see this as a very nice pairing, a very, very good hedge over here. Okay, right? So this is method number one. You can potentially hedge it just by using a simple ETF. But how about those of you who are more inclined towards the tech sectors, right? The tech companies, what can you do? Okay, the tech companies, you can actually look at the other two ETF. So this is KWEB, KWEB, okay, and CQQQ. These are a bit more similar to your NASDAQ, your QQQ, okay? So KWEB is a bit more concentrated. There are only 30 companies, and you can see the 30 here. Very familiar names like your Baba, Tencent, Meituan once again, okay? And you also have your Baidu, JD, right? All these over here, okay? Whereas CQQQ is a bit more diverse. They have a lot of the more high growth companies like your Bilibili, right? Kingsoft, Kingdee, right? JDS, right? These are some of the companies that I started to understand after I do this research for you guys, okay? So this is a bit more of like hyper growth. This is more of growth, okay? But interestingly, this has more shares, 154 companies, where this is 30, right? And their holdings is a bit more similar to QQQ, okay? All right. Okay, so I think Lai Ling has a question. Lai Ling is asking what's the minimum share to buy for 2846. Okay, so very good. So actually you can Google this, right? Minimum lot, they call it lot size, okay, for 2846, right? So you can see over here, the minimum lot size here is actually 100. Okay, you can see over here, the minimum lot size here is actually 100. All right, so you have to buy minimally 100 of them. Okay, now, is there a Hong Kong equivalent for QQQ, right? More tech focused? Yes, there is. Okay, it is 3067. Okay, so do try to remember the number if you can, write it down or take a picture. Okay, right? So remember, the broader index one is 2846. The one that is more tech inclined, right? Tech focus is 3067. All right. Okay, so 3067 is a rather concentrated portfolio, 30 companies. Okay, right? Very similar 30, you can see, Tencent, right? JD, Alibaba, Meituan, Xiaomi, Kuaishou, all these, okay? But one thing that puts 3067, right, above the other two, which is KWEB and CQQQ, is the fact that the Hong Kong listed ETF has a lower expense ratio. Okay, so let me show you over here. So you can see overall, if you look at either KWEB, MCHI, ASHR, right, their expense ratio are on the higher end, 0.7, 0.59, 0.65. Okay, whereas the iShare 2846, which is called the iShare Core CSI 300, okay, that's why 300 shares, right, 300 companies, only 0.16, you know. So if you look at 0.16 versus, let's say, MCHI, wow, it's almost 3 times less. 3 times the difference, okay? Then if you look at the 3067, this is the Hang Seng Tech ETF, is 0.25, okay? So while sometimes it may be a bit more difficult for you to buy Hong Kong listed ETF, right? And you may have to buy them in larger proportions, larger lot size, like 100 shares each time, right? Okay. So if 100 shares, then each time you buy, you have to buy 2,600 HKD. You cannot just buy like one share, okay? Right? But it might be worth it if you're a long-term investor. If you're a long-term holder, then actually you will save a lot on expense ratio. Okay? Fantastic. Right. Okay, Priscilla is asking, which brokerage would you recommend to buy HKSE? Okay, so I would say you can actually look at Weibo, right? Weibo actually has all of this on their platform as well. Okay, so let me just show you over here, right? How do you search for it? Okay, it's actually quite straightforward, quite easy to use. Okay, let me just go to the Weibo app first. All right, okay, so we are back here at the Weibo app. What you can do is top right-hand corner, tap the question, type the search symbol, okay? Type in which one you want to see. Okay, let's say we try 2846, okay? Right, so you can immediately see 2846. The second one, it says ETF, right? iShare Core CSI 300 Index ETF, right? There's an extra zero in front, doesn't matter. You search 2846, it will come out already, okay? Now, if you want to put this on your watch list, just press the plus button, then you add to your watch list. Okay, so let's take a look at it. Okay, right? So right now, the Hong Kong market is closed, but you can actually purchase this when the market is open on a normal Hong Kong hours, which is about Singapore's time, right? So you can just buy over here and it will show you how many you can buy. So you can see here, the lot size is by 100. Okay, so when I press, it only goes up by 100, 100, 100, 100. Okay, right? And I would say it has one of the lowest fee. So let's say if I were to buy 200, right, or 300, right, you can see the fee over here is about 16 Hong Kong dollars, right? So divided by 5 is maybe about $3 plus, $3 plus Sing, right? Which is very, very cheap, one of the cheapest, really. I would not say which other brokerages, but I do know other brokerages. When you buy Hong Kong shares, it can be as much as easily, 20 Hong Kong dollars, 30 Hong Kong dollars easily, right? So Weibo has one of the most competitive one, okay? WC is asking, is Weibo stock price live? Okay, I believe it is, but of course, right now the market is not open. Okay, so it will not be live. Okay, but when the market is open, then you can see it jump. Right, later we can see the US market. Then you are able to have a closer look. Okay, so this is how you can search for 2864. Just for completeness sake, I'll show you 3067. Okay, right. So 3067 here, you can press the Okay, just remember the number is easier to remember than the name. The name is very long. Okay, the name is iShare Hang Seng Tech ETF. Okay, but over here, yeah, you can see you can do trade, right? Then you can immediately see each time you buy is also 100. Now, take note that in Hong Kong, some companies is not by lot size of 100, right? Some lot size are by 500. For example, if I remember correctly, I think Meituan is 500 each, right? Whereas I think Tencent is 100 per lot. So it really depends on the company itself. There's no fixed rule that I know of. You just have to search for it and see what is the minimum lot size. But most of the ETF are 100. So it's still relatively okay, right? So for example, if you look at 3067, right? Over here, you can see it's 10 Hong Kong dollars. So if you buy lot 100, right, is $1,000 Hong Kong dollars. Okay, so if you divide it into Sing dollars or US dollars, it's a lot lesser, right? So it's still okay. If you want a dollar cost average, it is still possible over here. Okay, all right. Okay, so let me come in. Okay, I saw another question, Pete. Why are there other numbers? Okay, very good observation. So let me just erase this first. So you can see there's 2846, then there's 2846, and then there's 9846. What is going on? And 3067 also has a 9067. Okay, so basically, the first set of numbers here, these are in Hong Kong dollars, but they also list the ETF on US dollar currency. So if you want to buy the US dollar one, is 9846 or 9067. Okay, right? So that's just in USD if you want to, right? But generally, I would just let you guys know the more liquid one is actually the Hong Kong dollar one because it's listed in Hong Kong Stock Exchange. Okay, so most people would just buy their native currency. So if you want something that's more liquid, easier for you to sell, easier for you to get out of it, get inside into it, then I would stick to HKD, the first one. Okay, so 2846 and 3067 over here. All right. Now, the next question is, hey, Pete, how do I do investment pairing if I want to be even more specific in the pairing? I don't want to just pair US and Hong Kong. I want to pair specific company to company. Can I pair rival companies, peer companies together? And the answer is, if you can find a peer in China, why not? You can, okay? So you can actually look at specific company pairing. For example, one of the more classic examples is this. Right now in the news, there's a lot of talks about Elon Musk going back to focus on Tesla already. It's no longer going to be focused on Doge, okay? Enough of Doge already. But there's a lot of worry about Tesla, whether can they outsell China, right? Because China is a huge EV powerhouse, right? So there's a lot of worry on that. And if you want to say, hey, how can I protect my Tesla investment, or how can I position myself such that if really China were to do well, I will not be left in the dust, okay? And what I personally would do is that if I own a lot of Tesla shares, I want to find a counter company that is going to do really, really well, right? That's like a direct competitor to Tesla. Okay, so what is a direct competitor to Tesla over here? What do you think it is? Okay, right? What do you think it is? I'm going to drink some water. Let y'all make a guess. Yes, very good. Okay, and the answer is, of course, BYD. Okay, BYD is the largest automotive maker in China right now, right? It is often seen as the arch enemy or the nemesis, okay, right, for Tesla in China, right? In fact, I think BYD this year, in the last 2 quarters, already outsell Tesla, if I'm not mistaken, right, in terms of number of vehicles over here. Okay, so what you can do is, hey, if I have some Tesla, can I do some investment pairing to buy some BYD shares? Okay, but the challenge here is this. There are 3 ways that you can buy BYD shares. Okay, and let's see which is the best way. Number 1 is that you can buy directly from the Hong Kong market. Okay, so this is a Hong Kong flag, right? So Hong Kong market is 1211. Okay, and you can buy the BYD shares, right? Or you can buy from the US market. There is a OTC pink sheet, which is BYDDF. Right? And right now, each BYDDF is about $45. When I was doing this, maybe today will change it. Okay. When I was doing this, it was $45.78. Okay. And of course, you can buy the original BYD, the original, the A shares from the Shanghai Exchange, which is 2594. Okay, and each one of them is 348 renminbi. Okay, Chinese yuan. Okay. Oh, let me put my face here again. All right. But what is the challenge here? What is the issue? The issue is this. And some of you alluded to that earlier on already. Okay. The issue is when you want to buy BYD, let's say this is the Weibo interface, you will notice that the lot size is actually 500 shares per lot. That means the minimum number you need to buy for the Hong Kong listed BYD is 500 shares. Okay. So what does it mean? That means your total purchasing that you need to buy is about 183,000 Hong Kong dollars. That will translate to $23,600 US dollars each investment, the minimum that you can buy, Okay. So really that is quite problematic. Right? Imagine you have to, each time you invest, you have to put in 23,000 USD already. Okay. That will not be a good outcome. Like you can't even dollar cost average much unless your portfolio is huge. This will not work for you. Okay. Then the next possible option is, hey, how about I look at the Shenzhen one? Okay, I look at the China mainland. Possible? Yes, right? In fact, the lot size is a lot friendlier, is 100 lot size. Okay, but the per share value is 348 Chinese yuan. So what does this mean? That means your every single entry, your purchasing investment size, right, is over 4,700 US dollars each time. So it's still quite a large number. It's still relatively problematic here. Okay. And the thing is, of course, Pete, why don't we buy the US one? Right? Because the US one, the BYDDF, we can buy one share each, right? Okay, but here comes the concern that some of you have told me is that, Pete, I'm a bit concerned with Trump, right? Right? That now he's so anti-China. Maybe he will start to reignite this whole thing about delisting China shares. Okay, so I don't know about you guys. 3 days ago, 4 days ago, I don't know why there was a lot of talk about Chinese ADR, right? The American Depository Receipt, okay, which means any Chinese company that listed in the US through this method may be potentially delist again. Should there be a proper trade war, tit and tat trade war, okay, between China and the US, right? So, wow, buy Hong Kong also cannot, buy China also cannot, buy US also cannot, right? So what do you even do in this case? What can you do? Okay, so guys, is there a solution here? Okay, some of you are like, I buy from US cannot, I buy from the mainland cannot, I buy from Hong Kong also cannot. What can I do? Right? Is there a saving grace here? And the answer is, surprisingly, is Singapore. Right? In this case, Singapore actually comes to the rescue. Right? Now, last year, actually, Singapore started this thing, not the ADR, but they created their own depository receipt called the SDR, right? So for Hong Kong shares, they have actually listed 8 of them, right? So these are the 8 in Singapore, in the Singapore Stock Exchange through SDR, right? And the benefit is this: they are actually much smaller, bite-sized investment. So you don't need to buy like 500 shares, and their per share value is actually a lot lower as well. Okay, right? And of course, there are other things like you don't have any FX charges, right? And there's no custody charges for direct CDP and so on and so forth. I took this from the SGX website, so you can go and read it. Okay, but the important thing is this: when you buy this SDR, it is an equal representation, okay, of ownership of the actual share, either listed in Hong Kong or listed in Shanghai or Shenzhen. Okay, but in this case, these are Hong Kong SDR, so it's the Hong Kong one. Okay, and you can also trade it during the normal hours. So long Singapore hours is open, even if let's say Hong Kong is not open, you can invest, you can trade it. Interesting, Okay. Do they pay the same dividend as, okay, so Lailing is asking, do they pay the same dividend as HKEX? Yes. The answer is yes. Okay. Right. So you might be wondering, hey, Pete, how come in Hong Kong, maybe per share is for BYD, it can be a lot higher, like $300, $500. Over here, how can it be lower? Very simple. Okay. So if you look over here, there's this thing called the SDR ratio. So what they are saying is that for how many SDR is equals to one of the share in the Hong Kong exchange. Okay, so if you look over here for BYD, it is 10:1. So you can actually buy 1/10, buy a small bite of the original BYD shares. Okay, now over here is very interesting. You are not buying like a derivative or of the original share. You are just buying like a fractional portion, a fractional share of the original. Okay, and these are their trading code. So maybe over here I'll just pause it a little bit longer for you to take some photos, write it down, and they all start with H. Okay, and the BYD one is very, very interesting. It's called HYDD. Right? I don't know why they don't call it HBYD, but they call it HYDD. And over here, the 8 companies are Tencent, BYD, Alibaba, HSBC Bank, okay, Meituan, Xiaomi, Ping An, and Bank of China. Now, I would say broadly, if you just buy these 8, right, you already own a big chunk of the Hong Kong main market already. Because these are all the main players. That's why they chose them as the Hong Kong SDR. Okay? Now, if you find it hard to remember all these ticker symbol trading code, okay, don't worry. Very simple. I found a trick to find all these stocks right on Weibo in one glance. Okay, and what you can do is this: when you go to Weibo, in the search function, all right, you type in HKSDR, and all 8 of them will appear. Okay, you just type in HKSDR in the search, then you can choose the one that you like. Okay, so maybe now let me just go to the Weibo app to show you. Okay, so let me just exit first. Okay, so over here, I'm going to type in HKSDR, right? And just type in return. And you can see immediately all 8 of them are here. So the first one is Meituan, Xiaomi, why and whatnot, okay? And I've already added BYD to my watch list. So I'm just going to select BYD, okay? And over here, you can see per share of BYD that's listed, okay, in the Singapore SDR is $6.64, right? Okay, so what is the lot size here? So let's see, if I press trade, okay, right now the Singapore market is not open, so you cannot buy anything, but let's just simulate. If I were to buy shares, I can buy 100 shares. That means I can buy as little as $666. Okay, not very auspicious as a number, okay, but you can buy $666 Sing dollars each time. So that will make it a lot easier for many people to kind of dollar cost average into it. Okay, so this is what I really like about the Hong Kong SDR. So if I want to dollar cost average in, I want to buy, let's say, BYD, actually I wouldn't consider the Hong Kong route or the Shenzhen route or even the US route, because the Singapore Hong Kong SDR actually eliminates all the problem, be it lot size, be it delisting risk, right? Now, this company listed in Singapore, we won't delist them. We are always good friend with China and US. Okay, so I think it's quite safe. It eliminates all the risks. Plus, you can dollar cost average at a small amount. Okay, all right. So just to show you all, maybe others is there something that you want to see? If not, let me see. I will go into Tencent. Okay, if I look at Tencent, it's $7.96, and you can also buy at a lot size of 100. Okay, and the interesting thing is this is not very illiquid. You know, can you see the volume and top right hand corner? It's about 27,000 per day that's being traded, right? So it is not that illiquid. So if you want to sell, very likely you can sell it on. So you can see over here, the bid-ask spread is not that wide, although it's a little bit wide for US standard, but in Singapore standard, I think 5 cents is still fine, right? So you can see there's a lot of volume transaction happening. These are just today, okay? And Weibo can show you the time and sales tick by tick, okay, over here. All right, so this is Tencent. The ticker symbol is HTCD. All right, and if you want to buy Alibaba, Alibaba per share price is the one of the lowest. I think it's $3.87. So if you buy each time, you just need to pay $100. $300. Okay. Right, so you can see at the bottom, if you want to confirm everything, right, it's $300. Okay, and the transaction fee is below. The transaction fee for HKD here is $2.68, right? So it's still relatively cheap. You're paying like less than 1%. In fact, if you buy more, right? If you buy 200, 300, do you see that the fees actually don't go up as much? Okay, so if you want to be fee efficient, guys, I would say maybe don't buy like $300 worth of the stock. Okay, if you buy $300, you still pay $2 plus $3 of trade commission. But if you buy $1,000, you still pay $3, right? So I show you again. If you buy 100, it's $2.84. If you buy 300, it becomes $3.22. So it's less than 20 cent difference only. All right. So usually there's a bit more scale of economy if you buy more. Okay. All right. Fantastic. Okay. Now, another thing is that I have concern when I was looking at this, right, is that, hey, Pete, wow, this HK SDR, right, Hong Kong SDR is very new. Does it track the actual performance of the original stock well? Okay. So I did a comparison. I put the BYD 1211 in Hong Kong versus the HYDD in Singapore. Okay, so you can see over here, the pink line actually tracks the candle bar almost to the T. Right? Almost to the T over here. Okay? Right? So this is something that I find it really interesting. It helped me eliminate many problems. I can dollar cost average well. I can remove the delisting risk. Plus, the performance is actually exactly the same as the one listed in Hong Kong over here. Okay, right. So for investment pairing, I just want to repeat again what you can do is to look at country level investment pairing, right? So you can look at pairing, let's say QQQ with KWEB or CQQQ, or another way is you can pair specific companies, right? So you can pair like, let's say your Tesla together with your BYD. Of course, sometimes you may not be able to find a company that is exactly going to pair very well with whatever holdings you have. Then in that case, I would just say just pair it with like the country that you want to pair with. Okay, so I would say for US mainly the way to pair it is with China. That would be one of the easiest. Okay, I would not suggest pairing like with like other nations that may not do very well should US not do well. Okay, in fact, other than China, I can't think of another country to really do the opposite pairing. Okay, all right. Okay, very good. Okay, how do we open a Weibo account? Okay, great. For those of you who want to open a Weibo account, okay, let me just do some advertisement for Weibo right now. Okay, so Weibo right now they are offering up to $600 of Apple shares, right? When you fund the account and start doing trades. Okay, so for those of you who like to have this, okay, the link is over here. Rebrand.ly/IWP stands for Invest with Pete, okay, and Weibo over here, right? Or if you're using your phone right now on the computer, you can just scan the QR code, right? Otherwise, the link is over here, okay? The bonus that Weibo gave me for my viewers, okay, let me just share on the bonus, is that only for my viewers. Usually, if you go on the Weibo, the standard you get is 30 days of free commission, right? Actually, Weibo commission is already very cheap already, okay, but they give you 30 days of free commission. But for my webinar viewers, right, and they sponsor this educational series, they're going to give you 60 days of commission free for US stocks and also ETF. And this is on top of other bonuses, like your $600 of Apple shares, okay, right? But just take note, these are only for people who open up an account, right, and then from this webinar, and then you fund it. Okay, the funding is very, very important. Let me just emphasize, you need to fund at least 2K to be eligible for the newcomer bonus. Okay, so this is for Weibo over here. Now, let me just type the link into the chat, okay? And if you guys have any questions, right, you can ask me also in the chat as well. Okay. All right. Okay. All right, 60 days. And for those of you who sign up, you also can get up to 600 shares, okay, of Apple share. Why is Weibo fee so cheap? Okay, one of the main reasons that Weibo is able to, the fee is so cheap, right, compared to other brokerages, is actually at the bottom of the screen. It's here. Can you see this thing? It says 0 platform fee. Yes. So Weibo still has to charge you the standard, other fees that SEC has to charge on you, right? But they personally do not charge platform fee. Therefore, they are able to make it so affordable. Okay, but will they? When will this offer finish? I don't know. But the good news is that for those of you who sign up now, right, for the next wait. Okay, let me bring on again. Okay, then for the next 60 days, if you are accumulating your shares, right, then you can do it for commission free. Okay. All right. Okay. Let me see. Any questions that y'all may have? Okay, if not, I got another bonus for you guys. Okay, this one is just from me, just from me, okay, right? And I want to reward those of you who join me in this educational series, right? And is this for those of you who sign up with Weeboo, okay, through this link over here, rebrand.ly/IWP Weeboo, and you fund at least 2K, okay, at the end of this education series, right, I will do a lucky draw, okay? I will do a lucky draw. And the winner of the lucky draw is going to get a brand new AirPod Pro version 2. Okay, so apparently this is the newest one. Actually, it's newer than my own. Okay, right, the newer one. Okay, AirPod Pro 2nd generation, with enhanced noise cancellation and audio quality. Right, so this is just a very to make it more fun. Do a lucky draw for you guys. Okay, so for those of you who really want the bonus from Weeboo, plus in this case you get an additional chance of winning an AirPod Pro. Okay, you can sign up Weeboo on this link, rebrand.ly/IWP Weeboo, fund at least 2K, okay, and you will stand to win, right? How will I do a lucky draw? I will do it at the last session of this series, okay? All right, now, with the investment pairing done, I want to go into the next part of this webinar, okay? And it's to talk about the last time when we did the live stream, and I did 2 trades, okay? And I just want to go through them very quickly. And that is when we sold put options, okay? Right. Now, guys, just a very quick reminder, when we sell put options, okay, just remember that we are promising to buy shares, okay? Now, when you're promising to buy shares, a few things can happen. If the expiry date is more than the strike price, okay? Wow, I think my screen is really blur, man. Can you all see the screen? Probably not, right? Okay, let me see. Wow, there's something wrong with the software. I really apologize for this. Okay, so I'll just go through this very quickly, then we can end already. Okay? So remember, if the expiry date, if the price is above the strike price, nothing will happen. Okay? But if on the expiry date, the strike price, the market price is actually lower than the strike price, then you just will buy the shares. Okay? So what happened in the last round, okay, is that we did a sell put for NVIDIA at $80, right? And GLD at 300. Okay, now you can see the NVIDIA one is already 56% into the profit. Okay, and that is because if we look at NVIDIA right now, let's just take a look. NVIDIA right now, what is the share price? The share price is 104. Okay, whereas GLD, the share price is 305. Okay, so over here, yes, you can see that NVIDIA is already 56% into the profit. I've already made $46. On the expiry, I will make the full amount, which is $82. Okay, but the question is, hey Pete, why is GLD, the strike price is 300, the current market price is 305, okay, and somehow my P&L shows negative? And that is because before the put option expires, there's always fluctuation in the volatility. Okay? And right now, what happened to gold prices? Gold prices came down a little bit, right? So what happened to the volatility? The volatility went up. Okay? So even though you are seeing losses here, these are what we call paper loss. You don't actually realize the loss. So I will just hold this until expiry because it's only 4 more days. All right? I will just hold this until expiry and see how it goes. If it goes below 300, I'm happy to buy GLD below 300. But I think it's a bit unlikely that GLD will fall below 300 because now it's still 305. So there's still quite some way to go over here. Okay? So I just want to give you guys a very quick update on what happens to the sell put trades. Okay, and along the way, I will also share with you guys more ideas on what are the potential trades that you can do. All right. Now, the next thing is this. Right now, when you look at selling puts, right? And also buying gold. I would say just be very, very careful when out there a lot of people keep saying, wow, now is the best time to buy gold. Okay, the best time to buy gold is when the gold prices was very low. Okay, now the gold prices has already shot up so much already. Just be very, very careful not to buy at a high. Okay. And number two is for those of you who are buying put options to hedge your portfolio. Okay. Just remember that when you are buying put options to hedge, okay, the volatility is really, really high right now. Okay. Okay, let me see. Oh, Trisha asked a very sharp question. Is trading HK shares on Webull cheaper than via Poems? Okay, I am actually not very sure. Let me just check, okay? Poems fee for Hong Kong shares. Okay, let's try. Do they have a thing to see? These are online rates. Is there a cheaper rate? Margin rate. Is margin rate cheaper? Where is Hong Kong? Okay, so I think Cash Plus is the cheapest one already, if I'm not wrong. Right? So you can see over here, even if you are like their privileged member or whatever, right? Okay. Hong Kong, I think the minimum amount is 15 HKD over here. Okay, let me just zoom this in. Okay, is 15 HKD, which is I think still more expensive. Okay, so let's just look at Webull and have a look. Let me see. Just now I think I searched Webull is like 16 if I buy 500 shares, right? Okay. So actually, okay, maybe it's about there lah. Seems like. But that's minimum lah. Okay. Minimum and 0.05. Okay, 0.05. Okay, let's see. Okay, let's go to Webull. If I were to buy Hong Kong shares, let's say I try BYD. Oh, but BYD is a big amount though. Never mind, let's just try BYD. Okay, okay. And if I trade, then 500. Wow. Yeah, because the amount is big. Okay, but let me just calculate this. If it's actually this amount. Oh, wait. Okay, let me just check. If it's this amount, 300 divided by 195,500. Oh, actually it's lesser. Is it? Let me think. Yeah, it's lesser. Because over here, when I take this fee divided by the total amount, right? Okay, what I get is 0.15% versus the rate I think for Poems just now, when we look at the chat, right? Okay, is 0.5? Is it 0.05? 0.05. Okay, so actually if you buy large amount, maybe it will make a difference. But if you buy large amount, okay, so I still wouldn't encourage this, no matter the fee. I would say it will be better if you just buy the Singapore SDR, the Hong Kong SDR. That will be easier. Yeah. Okay, great. Okay, Madeline is asking, what happened if the price went lower than the strike price? Okay, so she's talking about the put options. Okay, let me bring back the slide first. Okay. What if it goes lower? Okay. What if it goes lower before the expiry date but rebound to a higher strike price on the expiry date? Will this get exercised? Very unlikely. Very, very unlikely. Because at the expiry date is higher, so it won't get exercised. Unless the person exercise your sell put before the expiry date, which is quite rare. Okay, so if you are doing it on very liquid companies, like over here we're doing it on Nvidia, right? The odds of that happening is not very high. Yeah. Okay. All right. Okay, Celine always asks the same question. I wonder Celine will ever give up on asking me this question. Is it a good time to enter and trade XLE now? I generally don't like to look at a trade of XLE at this moment because right now XLE is very uncertain with Trump, right? But if you look at TA, actually it does shows that potentially this could be a nice bottom, right? Okay. right? But I feel that on the absolute market recovery, right? Okay, so guys, think through it very carefully, right? Right now, the market is on 2 points. It's either it's going to really dump, then XLE will goes to the 18圣地狱 will go to the hell, okay? Or the market will properly recover. Now, when the market properly recover, right, will XLE actually run up like crazy? The answer is not, because if you look at XLE in the last 2 years before the recent crash, right, it actually didn't go anywhere. So even if the market were to run up, it's very unlikely XLE will do the same, right? So I don't like to do a trade that I have no positive upside. Yeah, right. So in fact, anything I would like to be involved is just the normal main market lah, right? So for example, right now you look at Nasdaq is already up 1.3% tonight. Okay, so far. S&P 500 is already up 0.69. Right? In fact, let's look at our Nvidia, which we sell put on. Right? Nvidia today is up 2.3% already. Right? And at the same time, look at it. Gold is also going up. Right? At 0.86. So I would be I'll be interested in things that I can have better understanding. Right? So right now your portfolio makeup, what you can do is, okay, maybe I can have some Hong Kong China exposure. Because if you look at China right now, right? So you look at MCHI, right? MCHI right now, quite good. US market go up, they also hold up a little bit, but less. But previously, when US market down, Hong Kong, Singapore, China market was going up quite hard. Can you see this part? It was going up really, really fast. Right? So this is the counterweight that I want. When the US market come down like this, the China market go up. Yeah. Okay. And MCHI, I like the ETF. And I generally don't want to buy the individual companies, right? Because it's a bit hard to predict, right? So, for example, right now, if you look at JD, wow, JD is down like 3%, okay? If you look at Meituan this morning, I think it was also down like, I don't know, where is it? Where's Meituan? Okay, I cannot find Meituan. Okay, here. Okay, right, so down 5%. Right, so it's a bit unpredictable. So when you do want to do balancing, if there is no direct balance, right, I will just do the country ETF, right? That is generally a lot easier. Okay, all right. So Celine, very good. I want to see how persistent Celine is. Keep asking me the XLE question. Okay, all right. So okay, over here, I just want to thank everyone for coming on. This is just the first part of many series. Okay, on the whole education series on investing. So today we touch on how do you protect your portfolio a little bit first lah. So you can balance your portfolio with a bit of US plus Chinese companies so that you can have a ballast, right? Either whether Xi Jinping wins or Donald Trump win, we don't know who will win. Actually, honestly, the best thing I hope is the two of them might get a room and then they make out and then they just kumbaya and the whole world will go to the next level of higher. Okay. But today I was talking to one of the investors, right? And I shared something that is also, I find that it's quite important, is that actually before this whole Donald Trump tariff thing, right? The whole market was ready to have the next jump already because we were going to see the largest improvement in productivity, right? In business growth, right? All the earnings were coming back really, really strong. But just before that thing happened, we have the tariff crisis and therefore all the price dropped. So actually to me, right now, this period, right, is a fantastic period to start investing because it delay the jump, the inevitable productivity jump, plus it drops the price, for everybody to buy in again. So I really treat this as a very good opportunity. And that's why within my SMG community, right, I've been encouraging everyone, if you're not confident in buying options, that's fine. Just start buying shares, start accumulating, right? If you dollar cost average in, right, in the long term, right, you will be fine one, okay? And right now, I think it's one of the best time to start doing your dollar cost averaging, which is why right now, for those of you who have not signed up for Webull, okay, you get to enjoy 60 days of free commission on US stocks and US ETF. That means your dollar cost average the next 60 days has no fee at all. Okay, so the link is once again over here, rebrand.ly/IWP Webull. Okay, and for those of you who sign up today, right, just to give you guys, to make it more fun, there will be a lucky winner at the end, right? You will stand to win a AirPod Pro. Okay, right. So how to join this lucky draw? Very simple. You sign up with my link, rebrand.ly/IWP Webull. Okay, and fund at least 2K. At the end of my series, I'll get one of you. I'll do a lucky draw, and I'll pick one of you to win this AirPod Pro. All right, this is the version 2 one, the latest one. Okay. All right. If not, that's all I wanted to share with you guys. I hope you all find this session useful. Right. We're going to do a total of 6 weeks of preparation. The next one I will touch on, once you have sort of set up your portfolio already, okay, how do you start as locating how many percent to each of your asset class? And I will also talk about how can you start your option journey. If you are new to options, right, I'll share with you how to get started with option. What are the first few easy options that you can start doing on? All right. If not, that's all I have for this session, and I'll see you all in the next one. Okay. Bye-bye.